All right, let's do another follow-up on gold. In my last video, I said I thought there was probably, well, my preference was that gold could continue this first daily cycle, appears to be a first daily cycle anyway, up and at least test this 1880 resistance zone. I gave that about a 70% chance of happening, and the other 30% was a drop into a daily cycle low, because this is getting a little bit mature. Not terribly so, but a little bit. And it looks like the 30% is going to turn out to be the correct call, because gold has come down. It has broken this uptrend line, so it's moving down into a daily cycle low. This is right translated, so the expectation is that the bottom will come above this pivot. But as I've said many times before, the currencies are the most manipulated markets on the planet, and gold isn't far behind. So it's not out of the question that now that the cartel has succeeded in stopping this breakout above 1835, and they're currently, they also have gold back below 1800, that they may be able to take gold down and break this pivot. So I'll stress here what I keep stressing with my subscribers: the metals market is not tradable. You're not going to be able to make money trying to trade mining stocks or trading the metal ETFs like GLD or SLV. You absolutely cannot trade the leveraged ETFs. When you look at a market like this is just a choppy back and forth mess. There's no trend, and the only people that know when these moves are going to reverse is the banking cartel, because they're the ones that are going to manufacture this. So you're just not going to make any money trying to trade this. And I know there are lots of traders that they want somebody to tell them that the gold is going to go up and go to the moon, and they want to pile into mining stocks, and it's just not possible. Nobody is going to make any significant money in a market like this. So my advice continues to be the same as it has been for almost at least since this top right here. At this point, it became clear to me what was happening, and that I wasn't going to be able to make any money trying to trade this market. And at that point, this just became a market to accumulate physical silver. In physical silver, you're not going to panic when you get something like that comes out of the kind of the blue like this, and the market turns back down when you're expecting maybe it's going to continue higher a little longer. If you've got shiny silver bars, you're not going to panic. You're not going to immediately run out and try and sell those back to your coin dealer. You'll hang on to them, and you will get through this sideways mess that we have been in intact and come out the other end. And then at some point we will break out to the upside and go much, much higher. If you're trying to trade this thing going back and forth like this, you're just going to lose money. So like I said, almost 6-7 months ago, it became clear to me what was happening, and that we weren't going to be able to make any money trying to trade this market. And at that point, this just became a market to accumulate physical silver. And I think anything you can buy under $25 is going to pay off huge in the next, I'm going to say 5 to 8 years. The bull, is probably going to take 5 to 8 years to complete. And right now, it's still up in the air as to how long this sideways churning mess is going to last. But it is giving you a chance to accumulate more and more physical silver. And anything under $25, I think, is going to pay off very nicely in the end.